Oil prices have closed the week range-bound, whereas both gas and electricity have lost significant ground. Let's take a look at the week's movements in some more detail. Oil prices started the week in bullish fashion, finding support in the OPEC, Russia-led efforts to limit production in the marketplace. Front-month Brent gained just over $1 per barrel day on day. Most of Monday's gains were eroded on Tuesday as market participants took profits, ahead of an expected correction to prices. Small gains were seen on Wednesday, although again these were reversed on Thursday. Overall, oil is currently well supported, underpinned by a solid economic outlook and supply and demand fundamentals. Despite the week's ups and downs, front-month Brent closed last night at $69.09 per barrel, and that's up 16 cents compared to last Friday. With a ramp up in wind generation, demand from the power sector dropped, and the gas system was heavily oversupplied throughout Monday's session. Demand forecasts were expected to be below seasonal norm over the coming weeks, and near-term contracts shed value. February 18 lost 2.25 pence per therm day on day. Longer dated contracts took direction from the prompt and ignored bullish signs from oil. Prices softened further on Tuesday. Higher continental imports and lower demand left the system significantly oversupplied. Further downward pressure was provided by a stronger pound relative to the euro. On Wednesday, Centrica announced it had been granted permission to produce the remaining gas from the Rough storage site. Centrica will therefore be converting cushion gas into working gas. As a result of this news, prices fell further. It was another bearish day on Thursday, although the losses were not as noticeable as those seen earlier in the week. Last night, all contracts closed lower than last Friday. The biggest mover was February 18, which lost 5.6 pence per therm. Longer dated contracts lost between 1.5 and 2 pence per therm. Power prices fell on Monday, with the biggest losers being prompt and near-term contracts. February 18 lost £1.25 per megawatt hour, whilst longer dated contracts lost around 15 pence per megawatt hour day on day. Prices moved downwards as wind generation increased and temperature forecasts were revised upwards. Prices continued to soften throughout the rest of the week, with bearish gas prices being the main driver. Softer coal prices also contributed to the losses later in the week. Last night, all contracts closed lower than last Friday. Summer 18 lost £1.05 per megawatt hour, whilst winter 18 lost 85 pence per megawatt hour. You can download the full version of this report from our website. Thank you for watching, and we'll see you next week.